Welcome back to Mithril International Fundraising. We will provide links to some of the videos and posts that we've done previously on things like who these videos are for, which are owner managers of family-owned businesses doing less than $100 million. International business owners of international non-US businesses and non-US owners who are trying to raise less than $100 million of capital. Similarly, firms who in that category are subject to or perceived as presenting increased compliance, international compliance risk, which leads to a range of problems and challenges and blockages of transactions of funds flowing by compliance departments of regulated institutions. We'll provide links to previous videos and posts on all of those things. And so we did a video previously about business owners, international business owners who, say for instance, from South America or from Africa or even from Europe, and they're using private banks and trustees, which are both regulated institutions in the United States, and they're accumulating wealth safely using the good professional services, the regulated services and platforms of regulated financial services providers in the United States. And you're using global brands like Wells Fargo, Citibank, Morgan Stanley, JP Morgan, Oppenheimer, and all the rest of them. Plus there are a ton of, in Florida, where we're based in Miami, there are a ton of small boutique private banks, US private banks, which is also interesting as well. And, people are using these large global brands as institutions, recognizable names to accumulate wealth, to attain trustee and wealth management services. And if you have, if the wealth that you're accumulating there, if you're accumulating everything in those institutions that you have, or the majority of your wealth in those institutions, and you're still growing your business, and you're growing your international business, and you need access to capital to either for working capital purposes or to make acquisitions, or you have to interact with suppliers, customers, and other people across borders and internationally, then it is entirely possible that as an international business, where you've got a holding company in a place like Uruguay or Canada or the UK or US, and an underlying operational company in a jurisdiction like Peru, Colombia, Bolivia, Brazil, doesn't matter, Mexico. If you have and you're a small business owner, and you have this type of international business structure, then you will present to regulated businesses as regulated institutions as some compliance risk. And so, as we've said, as I'm saying here, is if you are growing your business and you're operating, of course, sometimes problems, challenges occur. And when you have problems and challenges and you have placed all of your funds, all your capital, including your work in progress capital, in a US bank, in a US regulated financial institution, or with US trustees in large regulated institutions, and we're talking less than $100 million. On average, the service level that will be meted out to you if you have, say, 10, 20, 30, 40 million US dollars in a large regulated institution, first of all, their compliance department is going to pick up that you are in a crisis, and then your ability to resolve that crisis with the assistance of the large trustee or the large company is going to be very, very restricted. We have seen the service level that small clients get from large private banking and trustee institutions, global brands, and it's not, it's obviously not very big, very good. At the end of the day, these large institutions are managing thousands upon thousands of clients. They don't really know you that well. They're automating a lot of the compliance. I think Google just announced that I've been saying in previous videos that the global regulated financial system is becoming more transparent. Google just announced today that they have an offering for banks, which is, of course, with the power of Google behind it, the global financial system and for compliance and money laundering compliance is going to become even more transparent, because I don't think there isn't a online provider platform that has the power of Google behind it. And so when Google starts offering this money laundering service to banks, it's game over. Google is massive, to say the least. So we're headed for more transparency, and so risk and crises crop up sometimes, and it's due to misunderstandings, just simple misunderstandings. People who work at compliance banks and U.S. banks aren't very international. At the end of the day, I don't think there are any U.S. banks that have any major footprint outside of the United States when it comes to dealing with private clients. U.S. banks, when they have footprints outside of the U.S., they're mainly dealing with multinationals, large global multinationals, and firms and people who are doing hundreds of millions of dollars of business. I can't think of one, maybe other than Citibank. I can't think of a major U.S. bank that has a footprint outside of the U.S.'s borders, that deal with, lots and lots of small private clients doing 10, 20, 30, $40 million of business. So what that means is that there's not a lot of experience and understanding and knowledge in those departments, and the potential for misunderstanding and just not understanding is very real. And so, how do you deal with these problems? Well, in addition to using a regulated asset manager and a regulated private investment fund instead of a holding company, to hold the operating company, which means that as the asset manager is regulated and is doing the compliance, which then means that the private banks and your purchasers or people that you're dealing with can see that you are a regulated entity, and they can, to some extent, rely on your regulated status, and that's the way they look at it, and they will deal with you as a regulated entity. So that's one thing to do. The other thing that can be done when it comes to families who are doing international business and are non-US, instead of putting all of your capital in large regulated private banks and financial institutions in the US and trustees, what you can do is put half of your long-term savings and wealth management in the large institutions, and then select a smaller boutique private bank. Small boutique private banks sometimes have higher buy-in requirements, higher onboarding requirements. But once you get past those, you actually can access a higher service level, because they have obviously less clients and a much better ability to, get to know their clients and provide a customized level of service. But even that is relative. But still, it's considered doing that, because it's easier or more possible to work with a small boutique private bank for certain solutions and communication than a large private bank, global private bank, where you probably wouldn't get past sending in emails and dealing with automated systems and artificial intelligence and what have you. And I've seen that even deployed to people with up to $100 million in their portfolio with a large Swiss or whatever private bank. It doesn't matter. It probably goes beyond that. And then another option would be private trustee companies. So if you're gonna put your bank your wealth in the U.S., using U.S. private banking and all that kind of stuff, that's absolutely fine. But what you can do is you can either use a U.S. private trust company, or you can use a private trust company somewhere in the Caribbean, like Bahamas or Barbados. Now, a private trust company to some extent is regulated, but what you can do is you can negotiate with the large private bank to see if they will be a co-trustee or a director of your private trust company. And the whole thing about your private trust company being trustee of the trust for your family, where basically you've got a number of trusts and all of your wealth management is done with funds held in a private trust company that's acting as trustee of multiple trusts, is that you are in control of compliance. You can hire third-party compliance. You're in control. So therefore you get access to, you can work closely with your independent compliance person, not manipulate, just communicate and provide them with information. You can get to know them over time. They can get to know you over time. And you can have your large global trustee as a co-trustee. And then what you can do from there is, if you ever hit a crisis or something happens and there's a period where you need to work through problems, take on lawyers, and the large global firm can simply resign, or you can simply remove them. We will talk in future videos about how to set up trusts and do that. But most trust lawyers or trust providers will easily provide for things like that. So you can remove the large trust company. They probably would like to, or we won't find it inconvenient to resign quickly. And they will resign, and then you can get on working out and doing what you need to do and focus on your trustee, on your trust issues or dealing with the funds or what have you. It may be a case of you might need to deploy those funds for an acquisition. You might need to take on you might need to enter into an unregulated transaction. So it could be a positive thing. Or it could be that you need to work through a misunderstanding, something like somebody in compliance somewhere has, completely misunderstood a compliance report, hasn't, interpreted the Spanish correctly because they're not a native Spanish speaker. Like, there's any number of things that can occur that cause misunderstandings, but can do serious business interruption and delay, create misunderstanding. But if you have a private trust company, you can deal with all that. You and the people who work for that, being the family members or the people, your employees, working for that private trustee company means you know your business, you know what's going on. You can sort out things. You can hire counsel, one counsel instead of, your trustee hiring their own counsel and then going off in a completely different direction to one which is in your best interest. There's all these things that you can do when you have a private trustee company that you can't do when you have basically just put all of your wealth into a large global trustee company. Some of them will be amenable to being co-trustees of a private trust company. Some of them might not. But as I say, you can still put some long-term wealth with them, and then on others, then you can create the private trustee company and carry out wealth management on funds, because we understand the opportunity cost of time and all that with excess funds, which might only be needed eventually in the future, and in the meantime can be plugged into the wealth management system. So that's it for private trustee companies. We'll obviously post more videos talking about those in more detail, the different jurisdictions and types and what is possible and what is not possible. But definitely dividing your accumulated funds across large private banks, boutique private banks, and your own private trust company. This is going to be more and more necessary as we go into, as we move into a more transparent, regulated system. You know, whether you're exiting your company or acquiring or fundraising, a private trust company, boutique private banks can add a lot of flexibility and ability for the smaller family. And when we say small, we mean less than 100 million. These things can add, you know, they're right size. I would call them right size. They're the right type of machinery, the right type of structure that you need for that type of wealth. So thank you.